About 20% of global oil supply passes through the Strait of Hormuz. Drawing on academic studies and past supply disruptions, Bloomberg Economics estimates that a 1% drop in supply raises oil prices by about 4%. That suggests a closure of the strait over a few months would raise prices by 80% from pre-Iran war levels, taking them to the cusp of $120 per barrel. Oladipo Ajayi, head Fixed Income and Forex, Chapel Hill Denham Securities, joins me for more on this. Thank you so much for joining me today, sir.
Yeah, good morning. Thank you very much for having me this morning.
I also have on this call Temitope Kolade, Associate Director, Oil, Gas and Power Group, Andersen in Nigeria. Thank you so much for joining me today, gentlemen.
Thanks for having me. Good morning, Petrol.
All right, good morning to you too. Let me begin with you, Kolade. Some Nigerians have asked how the escalation in the Middle East affects the price of petrol in Nigeria. Somebody actually asked me that question yesterday in church. Now, let's set that background before we continue.
All right, thank you very much. Again, it's quite clear that we still depend on a lot of imports, whether you're looking at it from the side of the refined products or the crude that are the Dangote refineries now uses to refine fuel. So a large portion of what will depend on is the imported products. And aside from that, we must also realize that crude oil, as it were, is a global commodity, and to a very large extent, the next best opportunity for every seller is to take it outside of Nigeria. So even if you had all the refineries working in Nigeria, the question would be, at what price would the refineries be getting the crude, even if we had production working 100% for us? While it doesn't mean that there shouldn't be some benefits for a country like ours that produces oil, the point is really that the fact that it's a global commodity means that it impacts us. It's not a conversation that impacts only Nigerians alone.
All right, thank you so much. Oladipo, let me come to you now. We know, and we've been talking about this, I think I had a conversation with you around this even before oil prices got this high. It presents a double-edged sword for Nigeria. I'd like us to talk about the ramifications, really, and if there is a balancing act, because on the one side, I think I should just leave you to talk about it. You're the professional here. Go ahead, please.
Well, for me, I think if you look at it all together, for me, you know what? Sometimes when you trade, you say it's zero-sum game, but this doesn't sound like zero-sum game to me. And one of the reasons why I would say that is that on the better side, Nigeria government will actually enjoy a level of accretion on the reserve, more revenue in that regard. Better prices than what was budgeted for in the this year budget, which also means that there will be a lot of funds to actually play with by the government. But when you look at the other side of it, that's where an average Nigeria comes in, and we're already seeing the impacts of that already. And one thing about it is that you tend to see price actually reprice automatically. As of this morning, oil price is already around north of $100. When you look at the pump price in Nigeria currently, per liter is already above 1,000 naira. Even there was a release this morning that NNPC is looking at increasing the price to 1,150 naira. And when you look at it from that perspective, the impact on an average Nigerian is that the real income has actually dropped between when you get your last paycheck and where we are currently. It simply means that what your paycheck can buy has actually reduced drastically. And aside the direct price on people also, it means that it will actually fuel inflationary pressure. Inflationary pressure means that you will likely see the central bank coming to the market to actually mop liquidity at higher cost, so as to actually reduce the level of cash circulation and also fight inflationary pressure. And in the long run, when you look at it all together, the government will also pay in terms of cost of borrowing. And although they will gain from the fact that there will be more FX to actually play with, and currently FX in the MPM window is already trending towards 1,400. At the parallel markets already north of 1,400. But you wonder, a country that actually produces oil and that's enjoying better accretion better FX inflow. Yet the currency is actually suffering. One thing you have to come to understand is that in such a time like this, you tend to see most of this hot money actually leave your market. FPI is leaving such a time like this because they want to fly to safe haven. When you're looking at safe haven, it means that you're looking at a dollar asset, and basically some of them will go into commodity in such a time like that. And that's one of the reasons we have been seeing that level of pressure on the market. So when you look at the gain side and you look at the loss side, it tends to look as if the loss side actually overwhelmed the gain side. And that's why I said that it doesn't sound like zero-sum gains in Nigeria. I think it's more like a loss.
Interesting. Can there be a balancing act somewhere, anywhere? I mean, I'm just thinking about it.
Well, the balancing would have been if
Subsidy?
In the same vein, we are seeing the central bank opening tap, push more FX to the market, reduce FX rates. That one way or the other will help to reduce the impact. Imagine, okay, of course, now currently oil is not of $100, but imagine that the conversion to naira is now 1,250. Of course, one way or the other, that would have helped to actually reduce the impact on an average Nigerian. But for a smart government, a smart central bank government, it won't actually unleash the market at such a time like this because it doesn't know how long this war will actually last. So it will be as if you are actually releasing your arsenal early enough. And I think, and I actually support what the central bank currently doing now. They are looking at a point where everything will stand as we are seeing clarity. At such a time like that, they can now actually unleash the market to actually regulate where the currency is trading.
All right, thank you, Kolade. Let me talk to you here. Now, crude oil prices have risen to over $100 per barrel. I mean, getting very close to $120 if it hasn't even crossed it yet. That's a level I've seen 4 years ago. How bad can it get from here?
Well, it could get as bad as possible, and I don't want to be a prophet of doom, right? So I'm not going to speak to any specific numbers. Some people would say it could be as bad as $120 to $150 per barrel. But the expectation, I mean, I want to be the optimist here, is that if we are to align with what President Trump has said, that the world de-escalate this within another, say, 4 to 5 weeks from here, right? We should expect that there is also that concern at the European corridor to say that, yes, we had said we're not going to take so much of the Russian gas and oil. And now it might mean that we're going back to that and we don't want to go back on our word. So they should be able to prevail on President Trump and every other leader across the world to de-escalate this. The truth is that it doesn't get good for anyone, whether in Nigeria or the rest of the world. While US may be the biggest beneficiary from the point of, I mean, putting more into production of shale oil, why Russia may also be a great beneficiary from this, it doesn't benefit the rest of the world. And the expectation I have is that the global leaders will stand up and get this resolved very soon so that we don't start eating those numbers, because the uncertainty is worse than the sort of improvements that people might think they would have in their revenues as governments.
All right, you said something that really piqued my curiosity. You said world leaders. I'm wondering which of them you're talking about. But then the U.S., just like you said, seems to be one of the winners in this war. I mean, if not the only one, because the dollar notched its sharpest one-week rise in 15 months, and even gold has faltered. Meanwhile, emerging markets seem to be facing significant losses. What are your thoughts on this, really?
Apparently, like you said, the U.S. is the biggest gainer in all of these. And more importantly, I think that my colleague over there also mentioned earlier that one of the things that you might begin to see is the trust of people in stable assets like the dollar. And that also means that we would have a weaker naira, for instance, in Nigeria. India is going to be struggling. China is going to be struggling. They might start thinking of maybe getting those projects that they have put aside to say they wanted to have some pipeline across to Russia before, and maybe they will now get it back in sight. And so, yes, the U.S. seems to be the biggest gainer in all of these. And the expectation would be that, yes, while they gain, there are also some challenges for that government in itself in terms of stability and in terms of the inflation that would happen within that country in itself. And I do not think that, maybe the president might not have a lot to lose for that, but there would be pressure from the citizenry within the US to also ensure that things step down, particularly because they will also be using whatever gains to fund the war, which is not necessarily what everyone would desire to be. So there should be some balancing act somewhere, and I'm hoping that there would be respite also.
All right, let me come to you, Mr. Ajayi. Now, Trump says this is a very small price to pay for U.S. and world safety. Do you share the same sentiment?
I think I'm on the other side of the fence with that. I don't share same sentiment in this regard. I don't think this is a small price to pay, and I think it's a bit myopic to actually look at issues like this from only the American citizen view. The global world is actually paying the price. Just like what we mentioned, you heard what we said about around an average Nigerians are already going through on the back of such decision. And I don't think this is actually a small price to pay. And for me, I think this will actually affect the investment community for a long time because it's becoming as if the level of exogenous factors that we are seeing creeping into the models. They are now getting out of hand. I remember last year, we saw same thing happen around the tariff, the Liberation Day saga. And we noticed how the market actually reacted to that. Of course, we didn't feel much of that here in Nigeria because Nigeria is even more like a net importer from from America. And then what we actually export more like the crude oil, they actually cover under the AGOA agreement. And that's one of the reasons we didn't feel the impact. But when you actually send or you actually feel other African country or other emerging country or most of the countries that were actually affected, a lot of them actually face a bit of impact of some of these things. So I think we need to actually create an environment where people can actually make decisions that will actually help the global economy rather than actually pulling it up. So I don't think it's a small price. I think it's a big price already that people are already paying.
A needless price or one that is needed?
I don't think this is actually needed from my perspective.
All right, let's close on this. Let's close on this. I mean, in the U.S., for example, growth forecasts have sort of remained unchanged, with economists penciling in growth of 2.2% this year. We thought that the cost of higher wholesale energy prices would be offset by the huge gains to the U.S. fracking companies. I think Kolade alluded to this when he was talking about shale, that will benefit from bigger profits selling their home-drilled gas. Do you agree with that? And, let me just stop it there. Do you agree with that?
Well, I think to a great extent, I will actually pick my tent around that because that's unlocked another level of the industry. That industry for a long time has been very docile because of the cost, the price of oil in the global market. But with the aggressive, sharp increase in price, of course, you actually bring them back to the business. And a lot of them will actually want to capitalize on this little window to actually ramp up production and find a way to actually make a bit of fund from this. So one way or the other, that will actually help to actually reduce the impact of what that would have actually affected on the growth of the economy, on the U.S. economy. So I think I will agree with that.
All right, Kolade, let me close with you on this and then we end this one. Some analysts sort of worry about the chaos prompted by Iran's retaliatory bombing of Kuwait, Dubai, Saudi Arabia, and, most recently Azerbaijan, which could trigger a further reordering of global strategic alliances, and definitely not to the West's benefits. What do you think about this?
Well, I think in the long run, what gets this conflict resolved is diplomacy, right? And what Iran has also said with respect to all of those attacks is that they were not intended, and the idea was just to get some sort of calm. They've also said that they were not going to de-escalate they were not going to surrender to the pressure from President Trump. And so the expectation for me is that diplomacy would win in the long run. I think that the Middle East will stay together regardless of what's happening and would find a way to prevail on the warring parties to ensure that there is some level of ceasefire. right? Of course, there would be realignment. Already, we are seeing Russia saying that they might be giving more to China in terms of crude. The same thing would happen to India, especially again when you consider the fact that the US is taking control of the Venezuelan oil, and so it means that China would not get from that angle. So it's reshaping how things are going with respect to the global energy trade, and with the Strait of Hormuz producing about 20% of what goes around in the world with respect to crude oil and gas. It means that there will be that conversation around exploring other channels.
Right, Temitope Kolade, thank you so much for joining us on the show today.
Thanks for having me.
Oladipo Ajayi, thank you also for joining us today.
Thank you very much for having me this morning.